Hello once again, muling nagbabalik. This is the topic that we have to discuss again. Once again, the previous video is about the support and the moving averages. So, yung moving averages, this determines the strength of the trend or where the direction of the trend. So, in trading, the most important thing you consider is first is the trend. Second is the support and resistance, which I will be discussing at this moment. The third one is the chart patterns or candlestick pattern, and the last one is a rejection. So step by step, as you see on my previous video, diniscuss ko sa inyo yung about sa support sa moving averages so that we can determine what kind of action that we should get at kung saan siya pupunta, kung pababa yung price or pataas yung price, because when you follow the trend and you don't go against it, then most probably you will be in favor for the market, because majority is the market will go. So if the market will trend is down, your action should be put, and if the trend is up, then you should make an action. So now this is a live chart. Since this is the holiday for Philippines, it's Independence Day, and there is no work, so I have time to make some tutorials for beginners and also for those average trader who would like to clarify about some important matters to consider. Okay, so this is a old Australian and yen chart with 1 minute time frame. So these are candlestick patterns. So as you can see, what can you see about the movement of the market? Okay, so right here there is let's see. So right here there is a trend. Okay, so we will put trend line here. So even we don't put the moving average, then we can say that on this part, no. Okay, so let's see, have a trend line. So on this part, we have what we call downtrend. Okay, so what I am writing or making draws right now is about the channel of trend. So right here, as you see this line, the area between the blue line, this is what we call the trend channel. Okay, so it is obvious that the trend here is a major downtrend. But as you can see, when I put somewhere here, it goes ranging market. Okay, it goes up, then it does not go high and high. Okay, so when it goes like this, when you see that the price is going down or like a flat, so I will make again a trend line. Okay, so here, okay, so there, and another one is here. Okay, actually we can write like this. Okay. We can draw like this, and for the other one we can make like this, because it's ranging. Okay, it's a ranging market. Okay, so okay, like that. So as you can see from the previous, there is a downtrend, then it goes in the ranging market. So now what will be my topic is that I have to discuss to you, I have to remove this one. I have to discuss to you how to identify major key levels. Major key level means this is what we call a strong support and resistance level. Okay? And how can you determine the minor key levels? Okay? Major key levels, support and resistance, it determines the strength of the peak of the price. Because on this point, on this area, normally what happened is that there is a reversal or continuation or breakout. Okay, So it is very important that you should respect support and resistance as always. Okay, so now, as we can see, let's do the start here. Okay, so as you can see, as we zoom in, okay, zoom in, how can you identify? Okay, first, you have to look the movement of the candles. You have to identify where is the highest point that it reverse and where is the lowest point that it reverse. Okay, so right here, all I can say and all we can say that we can put support and resistance if, okay, if they touch the same level in different time. Okay, for example here, okay, this is the highest point. Okay, this is the highest point, and you can see the candle goes up, 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 and goes down. So the highest part is here. I'm pointing on my mouse pointer. Then on the second part, it goes down again. Okay, it goes down again, and I can draw here. This is support line is the below line, and the resistance line is the upper line. Okay, so as you can see, right here, it touches the resistance level. Resistance level is always the top. It touches the resistance line going down, and it touches the bottom. Okay, the bottom. Okay, so right there. Okay, so after a few minutes, it goes again, playing with the price, then it goes touch again the second time on this line. So what happened when it touches? It goes down. Okay, then it goes up again and touch again, but it cannot break. So there is a fake breakout here. There is a fake breakout. Okay, how can you identify false reversal or false breakout? When the previous price action, when the previous candle touches not more than, okay, not more than 3 touches. So it means that if here touches the line, and when it goes up here, there will be possibility of a false breakout, because still this line is not used for long time. Okay, so now it goes back again, then it goes here. As you can see, it touches again the resistance level, which means it touches already three times. So we can say that this level, resistance level, is very strong. Then you should consider this when you are trading, that you should not, you can take profit from above, okay, then buy the price, or buy the asset here, like right here down below. Okay, so let's make further. Okay, then when it goes here, there is a fake breakout again. Okay, it goes down, then it goes up. Okay, as you can see, this line is never been break continuously. This is a strong level. Okay, this is a strong level. Also, we can put some resistance here, because, okay, so right here we can put, because on this part it touches the resistance level, and when it goes after some minutes, then it will touch again for this arrow, but there is rejection. Okay, sooner or later, I will talk about what is candlestick rejection, what is price rejection. Okay, for now, we have to identify what are the major key levels. Okay, so how can we know the major key levels? As I said, the highest part of the wave and the lowest part of the wave. Okay, so now this is a major key level, major support level, because it touches here after some time, maybe 1 hour. So this is 1940, then about 2040, it touches again. So this is a major key level. So for the traders, you have to make a call here, or higher right here, and take profit from here to here. Okay, take profit. This is how you consider support and resistance. This is very important for the trading, because when you trade and there is no support and resistance, the possibility is that you are expecting that the price will reverse because there is a strong level. But if there is no strong level, you will lose because the price is free and there is no there is no strength that is pushing it back. Okay? You can identify if the previous price action does or did. Okay? So this is what we call the major key level. Okay, how can you identify the minor key levels or minor support and resistance? Just zoom in. Okay, just zoom in. Okay. Then you will see, for example, here, there is a 3 rejection. So it means that there is a minor trend or minor resistance level here. It also rejected here. Okay, rejected here. And also when it comes here, there is a rejection down, rejection down, rejection down. Okay, so we can say that this is a minor key level. Okay, so right here, when I draw this line, there is also an price action here. So when you see this one, this is a very reliable setup because it touches first, then it goes after so many hours. Then afterwards, when you get to this point, then you expect that it will not break the line. Okay, but as soon as it gets here, when you see this red candle goes down, this is the indication that this line is being broken. This line is no longer reliable. Okay, so candlestick rejection is very important, and proper putting the what we call this proper putting this support and resistance is very important. You have to practice this one. If you don't, then you will have some mistakes because some candles are tricky. It closes near on this support and resistance level. So right here, as you can see, there is a breakout. So red goes down, it breaks already the line, then it goes rejected, rejected. There is a change of polarity. Then this line becomes a resistance level. Before it was below, then when there is a breakout, now it's already above. So this is now already a resistance level. Okay? So always remember, support is under and at the top is the resistance level. Okay, before you make a trade, what I do in every morning time, I study the market, how the market is going, the volume of the people trading, and I mark the major key levels. Because as soon as the time goes by, as the hours goes by, the price will approach this kind of lines. For example, here, I plotted already on the previous price action, so you don't need to identify it when the trading opportunity comes. So this is how you prepare your trade. Okay? You have to see the news, you have to identify what is the proper time, how can you avoid the news, mark the major and minor key levels, also mark the trend or the trend line. You have to do it because soon, by practicing this kind of strategy, you will see that you are gaining some improvements. So here, for example, here we have what we call a change of polarity, also a major key level. Yes, because right here it rejected, then goes up again, rejected right here again, then right here change of polarity, it becomes support level, then there is a breakout here, then there is a rejection here, so it is a strong level. But here there is a rejection also, but here it cannot take anymore, it goes down and it becomes resistance because the line is being tested many times. Okay, for binary options trading, support and resistance level, when we consider this, it doesn't matter if this is very far or very near. as long as you mark it properly, as long as you have a reason out that this is a correct line, then it will work. Okay? But in forex trading, I don't think so because they are more focusing on the chart. Okay? So for binary options trader, for what we call is the short time traders, turbo traders, we are considering minor key levels. Okay? For example, here, we can write support and resistance also. Why? Because the candle goes down, it rejected, then it goes back again here, like in this channel, it goes back, there is a breakout. And there is a breakout here, this red line, this red candle. Then it goes back again and rejected. Why? Because this becomes already a resistance level. Before this is a support because this is below. And now when it's breakout, it becomes up. It becomes the top. So resistance level. Okay? So I think it's good enough. Some concepts that you remember about support and resistance level. But do not forget, practice, practice, and practice makes your improvement fast. Okay? Because the valuable thing in the trading is not what you get or how many wins you have. It is about your experience. It's about how you read the candles and how you predict, assess the candles. This is your difference between normal people who are working hard for their money. Because on the trading, you have this kind of skill. Okay? Because some companies, they hire employees because of time. But if you have this kind of skill, you can be you can be yourself, your own boss. So, I think you get some knowledge about what I have presented right now. So, the next thing that I should discuss is about the rejections. And after the rejections videos, I will discuss about the chart and the candlestick patterns. So, if you combine these four, trend, resistance and support level, chart patterns, and rejection, you have around 80% of winning. And the 20% remains on your attitude. So the rest assured that attitude, mindset is still important. So once again, I have to stop the video now, and I hope you get some knowledge about this one. You treasured it, and you will be profitable if you follow this. Thank you very much.